Welcome to another video. Today, I will show you exactly how you're supposed to be approaching the market from a technical and order flow perspective. So we will be taking a pair, dissecting it from a technical and order flow perspective, and by using the combinations of these two different analyses, we will be deciding exactly which is the best zone to be looking for a potential trading opportunity. So the video will be very educational, and I suggest that you watch the video until the end. Now, if you're new to the channel, I'm a top author on the TRADINGVIEW platform, and I share free education and analysis on all my platforms daily. So I suggest you subscribe, and I will see you in the video. Okay, so it's definitely time to make an update on the full analysis that we had made on this channel on Euro USD, because the market did exactly what we wanted it to do. You can go and check out the previous analysis on Euro USD in description, or you find it linked here above. Now, what we wanted to see on Euro USD is the market create a higher high and then start the move to the downside, going and hunting all the stop losses above this level before starting the move to the downside. Now, for the full complete analysis, so all the reasons for which we wanted to see Euro USD start this move to the downside, you can go and check out that link, that analysis, which, as I said, you find it linked here or in description. I really suggest that you go and check it out because it's very educational. And in that analysis, we said higher high, and then we wanted to see the move to the downside to start. I know many of you are already capitalizing on the move to the downside, and great job. But in today's video, we have to speak about where is the next opportunity for Euro USD. So we have to perform a full analysis, and then we will see where the next opportunity is for this pair. So let's start our full analysis from the monthly time frame. Okay, monthly, weekly, and daily 4 hour. We will check also the COT data to see what big banks and institutions are currently doing on the euro, and we will see where is the best zone for an opportunity. Let's start our analysis from the monthly. Now, on the monthly time frame, what we can see that clearly the market created a double bottom. So it went to test this low, created the move to the upside, tried to break lower, however, it failed multiple times. Now, why did it fail multiple times? Because as you can see, first it tried to go lower here, try to go lower. Every single time the buyers, what they did, they protected that zone. So they stopped the market from closing lower and actually closed back above. And as you know, to break a level, you need to see a close below it. So here, multiple times buyer protected the zone, and now the market started to move to the upside. Specifically, if we look at this last monthly candle, I made a YouTube video specifically on this candle. Every time that you see a candle like this, so with a very long wick, the next candle is supposed to fill in the wick. Now, why is that? Why the next candle is supposed to fill in the wick? Because on lower time frame, what this pattern indicates is that if on the monthly you see a candle like this, on the weekly you will see an impulse and a correction that is creating the wick before the continuation to the upside. In fact, that is exactly what we have on the weekly, and I will now show you. So if we will see a monthly close like this, we can expect the next monthly candle to fill in this wick and start a move to the upside. Specifically, this monthly candle closes in 11 days and 12 hours. So if in 11 days and 12 hours this candle will be like this, next month we have very high probabilities of having a bullish month for Euro USD, just for a more long-term analysis. Let's go more to the short term. What do we have on the weekly time frame? On the weekly time frame, we clearly have a market that has created this overextended W formation. One of the reasons for which we wanted to see this retracement is because we had an overextended W formation. And after an impulse in the market, because clearly this is a strong impulse in the market, if we want to measure the retracement from that impulse, what are you supposed to be doing? Taking your Fibonacci from the low to the high of the impulse, and you will identify a first target to the downside, which is at the 0.382. Now, why exactly the 0.382? Because it's the first structure level that the market encounters. So the first support zone from a Fibonacci perspective, which in this case is also aligning with weekly structure. So this previous weekly resistance, which is now turned support because the market is approaching it from the upside. Always remember, previous resistance will be turned support, and previous support will be turned resistance if the market breaks the zone. So clearly we have our first support confluence of support at this area, which, if you remember, is our target zone for the retracement on Euro USD. So immediately on the weekly we have a strong support area, and we know that if the monthly will close like this, from here we can definitely expect the continuation to the upside. Perfect. Let's go down on the daily and see what kind of situation we have. But before performing our full analysis also on the daily, let's go and see what we have from a COT perspective, so commitment of traders. What big banks and institutions are currently doing on the Euro USD. How are they positioned? Just a quick reminder, make sure you comment below and you let me know which pair or topic you would like me to cover or analyze in the next video. Now, if we check the Euro specifically, always remember that all currencies on the spot are traded against the USD. So if you check the Euro, what you're actually checking is Euro USD. And if you check the data for Euro USD, you can notice that we clearly went from having minus 114k net positions all the way up to having 95k net positions. So from having way more shorts than longs from an institutional perspective on the Euro to having way more longs than shorts. So from having more shorts than longs to having more longs than shorts. In fact, we're currently sitting with 184k longs on Euro USD, which is one of the highest levels that we had in quite a long time. And we're currently sitting with 89k shorts. With the last report, we can also see that they closed 4k shorts and opened 10.2k longs, bringing the overall long exposure at 31.1% and short exposure at 15%. So we can definitely expect the continuation to the upside. However, we have to keep in mind one thing. The market at the moment is completely in a bearish structure, both from a 4-hour and daily perspective. Why? In creating this retracement, the market created this support zone here, okay? This green candle. Now the market has clearly broken its zone to the downside, exactly as we expected, because we want to see a lower retracement. However, since the market has created this move to the downside, this previous support is now turned daily resistance here. So we must also keep in mind that on the daily we have a bearish structure. On the 4 hours, the market is absolutely in a bearish environment, okay? Everything is pushing to the downside. So we can't be looking for any longs yet. So the way in which we have to approach this is, as usual, reactive and not predictive. So when the market will actually reach this zone, what we will be doing with students, we will be waiting for the market inside of this area to shift from a bearish market to a bullish market, and then only after the market on the 4 hours will have shifted from a bearish market to a bullish market, only then we will start to be looking for a potential longing opportunity if the market will actually provide one of our valid entries, because we always need to see all our rules satisfied before with students we take any trade. That is why it's very, very important to have a rule-based strategy, because it takes emotions out of the game, because your job as a trader is just to follow the rules of the strategy. Otherwise, you can always end up trading emotionally because you are not following rules. That is the best way to take emotions out of the game, which is a question that I get asked a lot. The best way to do it is to follow a rule-based strategy. If you don't have it, you have to develop it. So the way in which we will be approaching it is reactive, not predictive. First, waiting for the shift from bearish to bullish, and then, only then, we will start looking for a potential trading opportunity as soon as the market will provide to us one of our valid entries. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you. Also, make sure you go and check out the mentorship program. You find the link in the description. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them with me each and every day. In fact, I give you a complete market breakdown showing you exactly how to apply the strategies with entry, stop, take profit, and I also answer every single question that you have every day, including the weekends. So it's a very complete program. I suggest you go and check it out. Link is in the description, or I will see you in the next video.